I think that we are already starting to see the carry trade unwind. I think it's a slow deal. You saw South Korea's stock market plummet limit down last night to 8.4% to the downside. Foreign markets are already starting to bleed off. Stocks rallied today on the news that we're going to see a ceasefire in the Middle East. I do expect that we will see, again, it's hard to call tops and bottoms, right? We could have topped in the stock market, but if you lay the Fibonacci, levels over it, again, I'm not a TA person, so forgive me here, but the 1.618 is around 7,900 for the S&P. So I think that we might touch that before we see the wheels fall off this thing. Nvidia and a lot of the other tech stock has said they're continuing to rise, and so that's holding a lot of the market up. Like I just mentioned with Berkshire Hathaway, they could buy 95% of the stocks in the S&P 500, maybe more than that with their cash position. A large majority of what's propping up the stock market is the tech stocks, and so as we see people rotate out of those, there could be another narrative that transpires that I think could cause significant downside, including the reverse carry trade when that does unwind at scale. We're still hanging out around 160. Again, like I told you guys, 160, 161, 162 is where I think the Bank of Japan is going to have to intervene here. They've guarded the line at 160 pretty hard in the past, but with them having their monetary policy meeting on the 15th of this month, we've got 7 days. So next Monday, Sunday night, our time, they should be having, actually it'd be Monday night our time next week, they should be issuing their monetary policy. Many people are expecting them to raise 25 basis points. I don't know. I think that that's priced in at this point, and that's why we've seen the move in the yields. 10-year was back at 2.7 this morning. I can check it out. I've been very busy today, so I haven't got to keep an eye on it all. We're 2.73, not quite back to the all-time high that we've seen in the last 5 years, really longer than that, the last couple decades of 2.76, but we're not far off. So if we continue to see yields rise going into the monetary policy meeting, around 3% is where it's not very sustainable for the Bank of Japan to continue to pay the interest rates on the bonds. So that's another 10% move from here. If we saw a 10% move in the bonds, in the bond market,